Real Vision Daily Briefing live without a net. We've got the full band back together, Ed Harrison and Jack Farley. Welcome, gentlemen.
Yes, thank you.
Yeah, great to be here, Ash. You say the band back together when it's you and Ed. I don't know, you're the singer, Ed's the guitar player, but I'm the bass player, and the full band is back when you got the bass player, right?
I play tambourine.
If we're the Beatles, though, we're missing Mr. Wheatley. He's the fourth member of the gang here.
He's the drummer for sure.
I'm sure I will be on record as saying Max is not Ringo. Let's give him a little bit of credit, guys. So, gentlemen, a lot happening in capital markets, a lot happening in macro, a lot happening in crypto. Ed, what's on your mind today?
Yeah, I know that you want to lead it off with crypto, and we'll definitely get to that because there's a lot of volatility there, and we all have some thoughts on that. But the day started for me with the bullish PMIs in Europe. When I looked through the screen of things that were happening overnight, I saw a sea of green in Europe. And when I say a sea of green, I'm looking at the PMI numbers that came out relative to expectations. The only miss that I saw in Europe today was for the German number, which was the German manufacturing number with a PMI of 64, down from 66.2, with an expectation of 65.9. But 64 is still a great number. All of the numbers in Europe were in the green. They were all well into the 50s and the 60s. And this is all happening before they have a full reopening, before they're really fully along the way in terms of vaccination. That's very positive in terms of global growth. The only thing that I would say is the specter of inflation definitely hangs over because obviously you can have supply bottlenecks if not only the U.S. is going gangbusters, but then you add in an impulse to Europe. And we see that the number of negative yielding bonds in Europe has diminished significantly. Even the Dutch 10 years now in positive territory. Only in the Eurozone, only the German Bund that I can see, the 10-year is in negative territory. So a lot of things are happening in Europe. That's where I would start.
And let me ask you this. First, I'll give you a quick quote here from Credit Write-Downs. But Europe is coming back. These data points all tell you that. And what it's telling you is that European growth is going to play catch up to the US and perhaps even outperform. Boy, it's been a while since we've heard that. I anticipate more green in the weeks to come, where I see downside risk in the US due to the initial stimulus package earlier this year. Let me ask you this, Ed, a little bit of context for people who haven't been following European markets, particularly people in the United States. You've given us the update for what's just happened over the last day, last 24 hours or so. Give us the big picture of where Europe has been since the beginning of the crisis, so the last 12 to 14 months or so.
Yeah, so I think that they had the Cheshire Cat grin after the first lockdown, because they were hit hard, as was New York, where you are. But when they reopened in a very positive way relative to the United States. And so people were saying back in 2020, the Europeans, they've got this. Fast forward to the Kent variety of the mutation in Kent, and what we saw is that it hit the UK first, and then hit the rest of Europe hard at a point in time that vaccination was rolling out in the United States. So it hit the US not as hard. And so in the beginning of 2021, as we started thinking about the reflation trade, the full reopening, Europe was getting crushed. They went into a double dip recession. The United States was able to avoid that because of the vaccination wave. So you fast forward to today in May, and what we see is the US speeding along to full reopening in a way that the reflation trade in January and February was anticipating and now is almost upon us. In Europe, that's delayed, relatively speaking. So the numbers that we're seeing today are, I would say, the equivalent of numbers that we might have seen a month, 2 months ago in the United States. So the numbers that are coming out of the United States today are probably 2 months away in Europe. So July, August, that's when the full reopening of sorts will start to coalesce. So now's the time if you want to take your bets, upside or downside for Europe, now's the time to take those bets.
Yeah. Jack, how about you? Are you watching Europe? Are you looking at something else? What's on your radar screen? And anything to add to Ed's points?
Yeah, I think the PMIs today, Ash, were incredibly important. These purchasing managers index, again, a reading above 50 indicates growth, a below 50 indicates contraction. Obviously, we're now in a huge reflationary spiral, so you're not seeing anything close to below 50. But so the German number, 64, below the 65.9 that was expected, as Ed mentioned, that's for manufacturing. But I'd say that was a blemish on an otherwise spectacular picture for the economic data. And I'd like to draw attention to the U.S. services PMI, which was a 70.1 versus a 64.3. So that is absurdly high, indicating a remarkable amount of growth. The manufacturing PMI that came out at 61.5, again above expectations. You expect that would be slightly lower than the services because the market for goods has been very vibrant during the pandemic. It's been the services that were really hit the hardest. Just going back from what was it, last week's consumer price index, airline fares are up 10% compared to the previous month, and truck rentals are up 16%. So you're basically seeing developing world inflation month over month in the things that really matter most in these services, like airline fare as well as truck rentals. So I would say today's data confirmed the already very strong case that we're seeing strong reflation. And what does it mean for bond yields? Who knows? Bonds barely budged today. It's one of the least volatile days in the U.S. Treasury markets that I've seen in a long time.
Yeah. And I'm curious, we're talking about Europe. We have some thoughts, and I know that you've been thinking about this and looking into it and writing about it rather seriously, about UniCredit. Let's talk a little bit about that story, explain what happened, and give us a sense of the significance in your view.
Yeah, so the interesting bit is that, so we're talking about upside here, both in the US and in Europe, but at the same time, we had some news out of UniCredit. UniCredit's one of the largest, if not the largest, Italian bank, and they have these sort of hybrid securities where there's a provision in the security which says that if there's a loss, because they want to have a buffer against those losses, they don't need to pay the coupon payment for as long as they have those losses. And so UniCredit had a loss last year because of the pandemic, and so the new CEO decided not to pay the coupon payment. This, to me, points to downside risk.
Yeah.
And the reason it does is because you basically, you're always going to pay the coupon payment unless something seriously is wrong. So either this guy, the new CEO of UniCredit, is he is really taking a wild bet, or there's something underneath that tells you that at UniCredit they're having problems, that the pandemic has been so deleterious to their balance sheet that it's better for them to take the hit reputationally and forego the coupon payment than to actually pay the money out. So to me, it tells you that the European banking system, where there's less disintermediation from capital markets and much more of the credit growth that we're going to see in the full reopening is dependent upon that banking system, that there's still problems there. And so there may be some supply problems, supply of credit problems in Europe as they move towards the full reopening. And that's downside risk relative to the United States.
Yeah. Let's talk a little bit about the nature of these securities, because I think most people think of a bond default as being obviously something that is incredibly bad news, not just for bondholders, but also for equity holders. But these are actually something called COCOs, contingent convertible bonds. And for people who have been following this story about how European banks fund themselves, the interesting thing about this is that this comes from the 2011 vintage European banking crisis. It was the reason that these securities were created in the first place. And they were devised because of situations where there could be significant problems with the European banking system. And the idea was to have these sort of so-called bail-ins, a mechanism in the capital stack, in the structure itself, to basically be a steam valve. And now that we've used it, I think it's surprising that we haven't heard more about it, that it hasn't been a bigger story here in the U.S. I guess, there's a certain degree of risk that's associated with this kind of event. Jack, I know you're following this story as well.
Yeah, well, Ash, it's very strange. I don't pretend to understand these. Ash, I know you used to work in municipal bonds, so you have like Ed, you have a grounding in this, but I'm just sort of a spectator on the sidelines. But it's always struck me that these hybrid bonds, these convertible bonds, they're neither fish nor fowl, and that can lead to a lot of confusion.
Yeah.
I saw the bonds trade today. At just over 50 cents, 51 and a half on the dollar. And that was down from 60 cents. So, it was down a great deal. But the fact that it was priced at 60 cents on the dollar to begin with shows that the market was already pricing this in, that you had these contingencies. My question, Ash, is about a note I saw from an equity researcher that said that, oh, don't worry, they're still going to pay. Like they said, the bondholders, their fate remains uncertain, but the equity holders are fine because they are still going to pay their dividends. So, my question is, if these convertible things are supposed to be a steam valve, as you say, between the equity holders and the bondholders to protect the bondholders, how come the equity holders aren't getting hit at all? It seems to me very strange. So, I'd love, some speculation from you as to what's going on, because I don't understand this at all.
I have a great answer to that question. I haven't the faintest idea. That doesn't make any sense to me either. I think, Jack, for someone who never worked on a bond desk, neither fish nor fowl is a pretty good way to describe these securities. To me, it's an open question. And I think the reality is we've actually never really seen this play out before. This isn't the type of instrument that's been around for decades. We don't really have a whole lot of history to go on. It's kind of a weird thing. Ed, you've worked obviously extensively in the fixed income space. You write about it quite regularly in credit write-downs. What are your thoughts on this?
Yeah, I mean, I'm still scratching my head to figure out where this is going. I'm just thinking about it from a credit perspective. What happens to small, medium-sized businesses? What does UniCredit's balance sheet look like? Why are they making this decision? We just don't know. It's a new form of security. We don't know. We've never dealt with a pandemic. We don't know what their balance sheet looks like. I mean, they've been hit hard. There are a lot of moving parts. We just have to see. Maybe it's a one-off. It's an individual idiosyncratic decision, but I think that it's a red flag. So I look at it as an event risk that we should take seriously.
Yeah, I think a red flag is probably putting it charitably. There's definitely something here, and this is the it seems like potentially a warning sign, but maybe you're right. Maybe this is an idiosyncratic event, but at the same time, it's got to be, I think, something that comes onto people's radar screens whenever you hear someone missing a coupon payment. Obviously, it's a very significant thing, whatever the nature of the security is. Jack, did you want to jump in?
Yeah. Well, I just would note that over, let's say, the past 6 months, really, the problem that has beset the banking system is that too many people are paying off their bills. There's not enough debt. Obviously, the companies were borrowing a ton, but on the consumer side, it was marked by, everyone essentially paying off their credit card bills. And I forget the exact number, but some, hundreds of millions of credit cards were sent to doorsteps in the U.S. just because banks are very eager for that business. And then, because the companies have become so indebted, there's really a question of, where are banks going to allocate capital to make these loans? So perhaps, Ash, if you wanted to be charitable, you could say that there's been a disturbance on the side of the force to too many people not defaulting. So actually, this is a welcome thing. But I don't know. Maybe I'm looking at through completely strange lenses.
Listen, I think that's right. I think jump in, Ed.
Yeah, I was going to say that, I was just looking at something. The European Central Bank, it warned 2 days ago about heightened risk to financial stability in Europe. So the picture in the U.S. is slightly different than the one in Europe. And that's why we're talking more about UniCredit. They said on Wednesday in their financial stability review that the uneven impact of the crisis meant that they become more concentrated in specific industries and countries in terms of risk. So, when you look at what the ECB was saying, that, a higher corporate debt burden in countries with larger services sectors could increase pressure on governments and banks in those countries. And then you see literally 2 days later, UniCredit missing its coupon payment, the tie together has to make you think that there is something weird going on in the European banking system. And it makes me think back to the middle of 2020 when Roger Hurst was talking to us about the European banking system as the canary in the coal mine, that he was watching that like a hawk. So yes. I think we should definitely pay attention.
Yeah, very well said. For me, again, could be an idiosyncratic event, but whenever there are crises, we always look back in retrospect and go, boy, there are this one little weird thing happened, and then this other little weird thing happened. I wonder why we weren't paying attention to it. Again, could be idiosyncratic. I would say Jack Farley, neither fish nor fowl. Ed Harrison, it's a red flag. Those are two pretty good points to wrap that conversation up on. So much else happening in the market today. What do you think, guys? Should we jump in and start talking about crypto?
Can we?
I know you want to do it.
I'm asking permission because I know there's more to talk about. Go ahead, Jack.
The Ford truck, or do you want to quickly do the Ford truck?
Well, let's talk a little bit about the Ford truck. This was an article that Ed sent me last night, and I thought it was really compelling. Ed, give us the context for this story, because it's really, I didn't realize how cool the specs were until you actually just told me about it today. So jump in and tell us about this.
Yes, so I'm a fanboy of the F-150. I know people in Pennsylvania who drive the F-150. It's the most important truck, the biggest selling truck in America. Ford came with a version of the F-150 yesterday. It's called the F-150 Lightning truck, and it's going to be delivered in mid-2022. Great things. People were very impressed. It was a very good showing. And some of the numbers that they came out with, some of the little stats are amazing. This is a truck, 770 foot-pounds of torque, 600 horsepower, 0 to 60 in 4 seconds. It has this thing called a frunk, which is an EV term, because there's no motor there, so you can load it up with things in the vehicle. 300 miles in a single charge. Basically, this is an F-150 that is an electric vehicle like Tesla, and this is a form factor, just to use a term that we use in computer science, a form factor that people know. My mother-in-law, as an example, she's bought the same car over a 15-year period repeatedly. I think she's on her 4th iteration of this car. So this is a car, the F-150, which is the highest selling vehicle, and now we're seeing an incredible version in the EV space. Yeah. That's a big deal.
Yeah, absolutely. This is not just a popular car, it's a beloved truck. If you grew up where I did out in the country, across the street from a cornfield, the way 20-somethings in finance as interns look at BMW 3 Series, that's the way people in the rest of the country think about F-150s. It's a beloved vehicle. And boy, 0 to 60 in 4 flat, it is fast as a bandit.
Yeah. And it hauls. I mean, it does everything you want an F-150 to do, but it has those EV bona fides. So yeah. Starting price is $40,000. The starting price for the existing F-150 is $29,000, but the average full-on, when it fully loaded F-150 is $50,000 now. So this is well within that wheelhouse, and it's also a direct competitor to Tesla. I mean, the way that I'm looking at this, to be honest with you, is through the lens of Tesla, because I look at Tesla as a optionality. So when I think about scenarios, I think about downside scenarios and upside scenarios, and you put them all together, and it comes out to an option price, which is the stock price. What the F-150 is doing is it's taking some of the upside scenarios off the table for Tesla. It's telling you that Tesla now has entrenched competitors which can cut into its potential market share. And we see this with Audi, with Mercedes, but this is a market that Tesla hasn't even gotten into yet. So I think that the upside scenarios for Tesla have taken a dent, and it's something to be thinking about.
Hey, Ed, one more question for you. did you mention the feature about it being able to power your house? I may need to get a driver's license again just for that.
Yeah, I think I don't know where I saw this. I'm looking for it. I have this article, but I heard that basically it can power your house during an outage for 3 days.
Ash, I wonder, can it power apartments on the Upper East Side?
I doubt that, unfortunately. Hey, Jack, now that you jumped in, let me throw a question to you. I'm just going to play devil's advocate here on this. What about this idea that markets have mispriced Tesla? And that, you think about the big three here in the US, these are not companies that are just going to sit around and do nothing. Obviously, they're very large. It takes them time to move. But if you look at, for example, Microsoft, which missed out on the internet, missed out on the cloud, missed out on cloud software services like Office, didn't translate well. They just kept working on it. It was a big ship. It took them some time. They iterated, and eventually they got it right. Is it possible here that markets may be mispricing to the downside domestic U.S. auto manufacturers in a legacy sense and overpricing Tesla? And hey, while we're at it, we'll throw in, what about international competitors, Volkswagen, Honda, Toyota? What are your thoughts?
I think that's certainly possible, Ash. I think for the longest time it was, oh, can you believe Tesla has a larger market cap than Ford Motors, despite the fact it sells a small fraction of the cars? Then it was, can you believe it's larger than GM and Ford combined? Then it was, can you believe it's larger than Ford, GM, Volkswagen? Then it was, can you believe it's larger than ExxonMobil? And then it was, can you believe it's larger than every single traditional automaker combined? So I think that it obviously was underpriced at the beginning because people didn't understand that it was a true leader in the space and that everyone was sort of just fooling around at the beginning. But I mean, the CEO of GM has made very clear that by 2030 she expects the vast majority of GM cars to be electric. And the CEO, it's funny. So it sounds like Ed, he really likes the story. He's foaming at the mouth bullish because he sounds like he may want to splurge and buy one of these cars. But I share a similar bias, but for a different reason, which is that the CEO of Ford shares my last name, Farley. His name's Jim Farley. No relation, although perhaps I'll just imply that he's sort of my uncle. So I'll be like, pretend I'm on the inside of Ford. But yeah, I mean, Ash, to be honest, this is just my opinion. I think that you're absolutely right. If you see how Ford versus GM have been trading relative to Tesla since the beginning of the year, if not February, you clearly have seen a reversal of that trend that, of course, is related to the rotation from growth stocks. Tesla has a huge multiple into value stocks such as Ford and GM, which historically have been not really a growing business, but now that they're electric vehicles, perhaps. Also, so if you want to really take the safe play and say, I don't know, it's going to be Ford, I don't know if it's going to be Farley, who's going to win, Farley or Elon Musk? Who knows? But you just want to bet on electric vehicles, which is it's going to happen. I'm sorry to people who don't think it's going to happen. It is. You could invest in lithium miners. You could invest in cobalt miners. You can invest in rare earth miners such as neodymium, praseodymium, which is required to power the motor of every single electric vehicle, including not just lithium batteries, but also hydrogen-powered batteries. So there's a lot to think of. I mean, I follow the Tesla stock pretty closely. That has not been trading well at all. If you were a seller of calls, you've done well. If you've been a buyer of puts, you've done well. And if you've held the underlying stock, it just hasn't done well. And then there's not to mention Elon Musk's recent antics with regards to crypto. But yeah, there's a lot there.
Boy, you said
you talked about crypto and you were talking about things not doing well because I'm looking at the price of Bitcoin right now, 35.8, and Ethereum down 16% in the last 24 hours. Dogecoin's at 34 cents. Crypto, Ash, I mean, it's getting pounded. What's going on?
Yeah, look, it's a great question. It's obviously taken some substantial losses here. Look, we've been saying this all the time at Real Vision. There's something that's happening in the world that is a revolution right now in terms of the way that things get done, in terms of payment rails, the potential for programmable money, the potential for a digital store of value off the grid from central banks. All these things are very major factors in play. But let's be plain and clear. This is an incredibly, incredibly volatile market. If that's not clear enough, let me say it this way. You can lose money investing in Bitcoin. Obviously, the volatility of these assets is really incredible. I was reading some data earlier in the day. I think I referred to it on an earlier show from Rect Capital. that, effectively the degree of in the 2017 bull market, we had, I think, 5 to 7, 30 plus, 35 plus percent downturns in the price of Bitcoin. We can talk about this from a technical factor, 38%, obviously a key Fibonacci retracement level, but these assets are incredibly, incredibly volatile. And people should think about it. They should understand that. When people are screaming at them on Twitter to BTFD, they should not feel bullied by it. You can be interested in this asset class. You can be passionate about the technology without feeling like you need to step into a market and buy in to a declining price trend. Of course, none of this is financial advice. Nothing that you're going to get from me or anyone else on the internet is financial advice, because these are financial advice is by definition information that you can't get from a television or streaming news program. People need to understand their own risk tolerance. They need to understand their objectives. They need to understand their goals, and they should talk to a professional before making decisions about allocating capital.
Yeah, definitely talk to your IRA before you buy Dogecoin.
Well, let me posit this. Okay, first of all, we know that Bitcoin's broken through its 200-day moving average. So, just as Raul was telling us before, really, we were at oversold levels and we had a bounce. The bounce that we had yesterday, which got us up to 41, 42 at points, that was needed because we needed to wash out the weak hands, oversold levels. The price trend potentially therefore could stabilize. So we stabilized in the 40 to 42 range. But the reality is that 40,000 on Bitcoin is again below the 200-day moving average, and now we see price action, which shows us that has significance from a technical perspective. So we're seeing selling again. To me, that suggests that we're in a range where the next level of support is where you want to look. And from what I've understood, it's in the 30 to 32,000 range. So we could definitely retrace all the way back to 32, which was the low that we bounced off of, and we could even go down to 30. Those are the levels that I'm thinking about that we're vulnerable to. And when we get down to that level, you're talking about a being cut in half, or 55% losses. That's quite a bit more than 30%, or Fibonacci retracement of 38%. It's more like a 63% Fibonacci retracement.
Yeah, and let's break through those contents right there, because I think you make some important points about the levels. So we broke through the 50-day moving average at 54,000 about it looks like about 6 days ago, and then we cracked the 40,000 level, which was the 200-day moving average, and we've just kept falling. Now, also, one of the interesting things about the technical analysis on the digital asset side is there are a whole series of other indicators that are sort of between technical indicators in terms of technical charting and technological indicators, by which I mean things like the amount of digital assets held in hot wallets on exchanges, which demonstrates a willingness of investors to more rapidly want to sell off assets. There are a whole series of other metrics that people who are serious about this space, I'm talking about the hedge funds here who are participating in it, see, and these aren't yet standardized. So it's a very complicated market, and without really knowing what people are seeing on that side, it's also difficult to understand what some of the institutional investors are looking at and thinking about doing right now.
Yeah, so if I'm thinking about it, just the Fibonacci retracement levels, then when we're talking about a 38%, the next number to think about is 50, and then of course 61.8, the golden ratio. So 61.8%, that's a long way down from where we are now. But let me just say that when I think about it from that perspective, it's much larger of a retracement than the numbers that we were talking about before in the last bull market. But secondly, it also undermines this whole network effect, Metcalfe's law, that whole bit. Because the reality is that when an asset class collapses by that much, you really are at some point at a level where network effects work in reverse. No one's going to get into an asset that is falling, meaning it's the existing people who are there. So by falling this much, this quickly, really what you're doing is you're setting back the adoption level of the asset class, and that is negative in terms of the concept that you're benefiting from the network effects as people move over from the analog world to the digital world. So
Right.
this amount of retracement is dangerous in my view.
Yeah, it is certainly not, from a short and intermediate term perspective, something that anyone who's invested in this space wants to see. Let me provide just another bit of context here, perspective that I think is important. 32,000. That is the number that Bitcoin was at on January 1st of this year. So another way of saying that might be what we've seen relative to these sell-offs, which could be, as you say, in the 50 to 60+% range. One of the things that's important to note is the degree to which these assets appreciated dramatically to the upside during this most recent bull cycle in it. So it is important to note that if you bought Bitcoin on New Year's Eve of 2020, you are positive for the year still. Conversely, a date on the Ethereum side, 16 April 2021, was the last time that Ethereum was trading at the current price. So some of these sell-offs are from massive high base effects, which again isn't going to benefit you if you bought in 2 weeks ago or a month ago. But we have to put in context the fact that the appreciation of price has been so dramatic that the sell-offs are amplified relative to the high base that we were at, relative to the incredible appreciation in price that we saw. Effectively doubling between January 1 and the high of about 64 or 63,000 in mid April. Another important point: these prices cannot be exact because there still is not a national best bid, best offer on the crypto side. So you can look at something, for example, on CoinDesk and on CoinMarketCap and see two different prices, two different prints, particularly in periods of high volatility when there is a larger than usual inter-exchange delta or spread. Jack, I know you're also watching the crypto space. What are your thoughts on this?
Well, Ash, I think I would have to agree with your final point, which is just simply base effects. This space has gone up so much. I think it was about 2 months ago when Ethereum was, at about $2,000. It reached $2,000 for the first time, and I wanted to buy more because I was very bullish, watching a lot of Real Vision crypto videos. But then I was like, oh, it's at all-time highs. And so I did buy some more, and then obviously, felt great, as Raul would say, felt like a god when it went up to above 4,000. But, it's still at a higher place now than it was when, I bought it months ago. So I think you're absolutely right. Bitcoin's was at 32,000 on January 1st, as you say. If you compound the return that you have from it where it is right now, and you annualize that, that's better than a return that Warren Buffett has gotten. That's probably better than Netflix, probably better than Microsoft, better than Google. Like you're still doing okay. What does that mean to people who bought at all-time highs? Does that make them feel any better? No.
Right.
And I think there are people who can't stomach the volatility, and we can get flushed out. It'll be interesting to see. Where it is in a month. I think if in a month it's below 40,000, then I may change my tune. I may walk over to the Ed Harrison side of the camp. But we'll see.
And so I think that's where we are. To me, there's that one aspect of it, but there are other aspects of it which are potentially pernicious over the longer term. I think that you guys know that what I talked about, the regulatory side, and that's really what's happening here is, I think around the time that the beginning of the year happened, I was talking about 50 and 100,000 levels, because a lot of people were throwing those terms out for Bitcoin. I said 50, yes, 100,000, no, meaning that once you get to 50, the regulators are going to wake up. They're never going to allow it to go to 100,000. For various reasons. I believe one of those reasons is obviously protecting people from speculative assets. And we see that both in China and the United States. And another is the space becomes so big that it becomes problematic for the control of the financial system. So my view is the opposite of a lot of other people's views who are bullish. I think that there's going to be a lot of regulatory risk once you get beyond the 50,000 level. We've already seen that, and they're going to reiterate and double down if we make another run up further. So to me, that tells me that when you think about it from a Metcalfe's law perspective, the ability for these assets to continue the rate of adoption becomes much more limited when there's more limited upside. And the last thing I would say is that it's also indicative of a fractured market. As soon as Elon Musk started talking about Dogecoin, suddenly people were like, wait a minute, there are these altcoins, let's start investing in these altcoins. Mm-hmm. That again diminishes the network effects of the likes of Bitcoin. And to me, that also is an impediment to upward momentum in the space.
Yeah. I'm all over that final point, Ed. I know we only have a few minutes left because Ash actually has to get to a very important discussion with Raoul Pal, CEO of Real Vision, and Hugh Hendry about the exponential age. That is going live at 5:30 p.m. So definitely stay tuned for that. And we'll at the end we'll discuss a little bit more about that. But Ed, to your point about just all these Dogecoins and all these altcoins popping up, the Bitcoin dominance index that's been slowly going down as you've had this flourishing of altcoins. And altcoins, call it Ethereum an altcoin. Some Ethereum people would get offended, and I understand why, because it kind of is the ecosystem of the actual the digital value layers that are being created, because things like Uniswap, things like and all these decentralized exchanges are on them. And Ash is like nodding his head like, yeah, Jack, you're learning what I've known for years. So you have that flourishing, but then you also kind of have a somewhat seedy underbelly. And I don't want to be too judgmental, but I think there are definitely these coins that are not run by terribly scrupulous people that don't have a specific purpose other than to pump coins. One thinks of coins like CumRocket. Dogecoin is really only the beginning. There's CumRocket. There's SafeMoon, which is promoted by Dave Portnoy. There even Joe Weisenthal, our colleague in financial journalism. He has a coin. He doesn't own any of it, but someone made a coin named after him called Stalwart. And there's one more coin, Scam Coin. There's a coin called Scam Coin. So I think that
there's also Ass Coin, by the way, which is really getting a lift.
Yeah, Ass Coin. Yeah, they missed one letter. Should have been Ass Coin. But
I'm sure Mr. Weisenthal would disavow any association with the coin. He doesn't own it. Someone made it for him, kind of as a joke. So much to say here, guys. I wish it's like we need two shows. We need like a double Real Vision daily briefing. But I just want to jump in here because you guys both made some really important points about the broader context. But let me just give us some of the news flow today, because I think this is really important. This is from a gentleman named Li Hu, who is the Chinese vice premier, who hosted the Financial Stability Summit and the Development Committee of the State Council for China on Friday. This is coming to us via CoinDesk from Amkar Godbol, who's a terrific reporter who covers the technical aspects and the market action on Bitcoin. Here's the quote from the Chinese regulators, quote, "We should be more alert for potential risks," pretty vanilla statement, which regulators often say, but here for me is the killer, quote, "We should crack down on Bitcoin mining and activities and prevent individual risks from being passed to the whole society." That language certainly suggests a sense of escalation in the aggressiveness with which Chinese regulators are pursuing these markets, and probably something to think about in the price action we see today, to Ed's points.
Yeah, to me, that is, that's not good, because the Chinese miners are critical to what's happening. And if the Chinese government thinks that it's going to take its remit, its regulatory remit into that space as well, then who knows what's going to happen next. So that definitely is to me, Ash, I think the catalyst for what we're seeing today.
Yeah,
Ash,
absolutely.
I got a question for you. Is there a possibility that that could exert a somewhat a negative impact on the supply of Bitcoin, because that's Bitcoin is mined, and therefore actually be good for the price in the same way that regulation for the oil and gas industry actually has
Right.
kind of helped the price of oil. I mean, the fracking revolution, that was great for the bankers who made all those dodgy loans, but it actually, profit margins, the oil companies did not do well over the past decade. But oil now seems to have stabilized above $60. Now that you have, at least the potential possibility of regulation. So do you think that actually that could be, take future Bitcoin out of circulation, or is it's going to disrupt the network and it actually is going to be bad?
Jack, that is a fantastic question, and it's one that makes complete sense. In the weird world of digital assets, supply does not quite look like the supply that we see in the traditional asset space, where you think about infrastructure coming online to create things like additional liquid natural gas or oil, because Bitcoin has something called a difficulty adjustment built into the algorithm. So as hash power moves off the grid, the difficulty adjustment kicks in to maintain the algorithm at a similar rate of block time. So while that would be a perfectly intuitive analysis in the traditional asset space, in the weird counterintuitive world of digital assets, it's not likely to have an impact on the supply side because that is fixed by the schedule in the algorithm and moderated by the difficulty adjustment. Gentlemen, we've just blown through all of our time. We didn't have a chance to answer any of the questions from the audience today, which I feel terrible about, but we will be doing more of that in the future. And as Jack said, Jack, why don't you tell the story? You're awesome at explaining Real Vision content. Talk a little bit about what we're going to be doing right after this show.
Okay, well, what is going to follow in but half an hour is going to be an experience that I think, whether you're a subscriber of Real Vision or not, it's going to be a real treat, probably of your year. So everyone knows about Raoul's exponential age thesis. He really changed his macro framework for the first time in a while, if not his entire career. Basically, that macro is what he calls dead. You're not going to see that volatility in the rates market, in the currency markets, the macro markets, where people like Raoul, people like Hugh Hendry, many other macro fund managers, Stan Druckenmiller, of course, sort of made their hay. And because of that, the real opportunity with all these markets suppressed, their volatility is suppressed, it's going to be the exponential technology trends, the most notable of which is crypto. So someone floated the idea about me, Raoul and Hugh, you'd be great to get that discussion, because Hugh, he comes from that world like Raoul, and he may agree with Raoul. Raoul may convince him. Hugh may actually say, hey, wait a minute. I come from this macro world. Macro is still alive. It's not dead to me. So I'm very interested to hear what Hugh is going to say. I actually spoke with Hugh on the phone earlier today, and he was preparing, and he has been doing his research on Bitcoin, and I'm sure he's got a lot of thoughts. So yeah. And by the way, moderated by none other than our favorite moderator, Ash Bennington. So I'm going to be getting my popcorn out. I'm going to be watching that. And by the way, if you, obviously this is going to be viewed, available to all Real Vision members, Pro, Blacklist, Plus, Essential, everyone can watch it. If you're not a member, you should watch it. And you can, by clicking on the link, you can sign up for $1 and get watch it and get a trial for 2 weeks, which is a very good deal. We do not normally do that. Normally, we don't even do dollar trials at all. So yeah, if the link, click the link if it's in the description. And if it's not, we will put it there soon.
Yeah, absolutely, Jack. And Hugh, of course, is Hugh Hendry, one of the great British hedge fund managers of the last many years, who is an incredibly insightful guy. Some interesting things to say, of course, as we talk about the European banking crisis. One of the people who really made his bones in the financial space and in the financial media space, became a major star in 2011, talking about precisely those issues. As you say, Jack, free on the platform, only on the platform, not on YouTube. All members go free. For everyone else, it's $1 for a 14-day trial. You get access to a GMI report, access to Slack, and the chance to win thousands in exponential assets. We're doing a giveaway. That's right.
Oh yeah. I left the cherry to you. I based in the Sunday, but I left the cherry to you.
Nice. And all Real Vision subscribers. By the way, do you know how exclusive the Blacklist is? Do you know what I just realized? I'm not on it. I saw like a thing on my thing. It was like, upgrade. Do you want to upgrade? I'm not there.
Yeah, well, I think it's actually not even the highest. Actually, I don't know, but yeah, it's very elite because it's like events. It's not just filmed on video.
Yeah. Yeah, it's the content is the same. It's for events and for things that we do in addition on a private networking basis, and that really is the interesting thing about the blacklist. So, gentlemen, I know we have to jump here, but Ed, any final thoughts?
No, I'm just looking forward to seeing what you had to say. I thought it was you were very diplomatic in terms of insightful. I think it's more like you never know what you're gonna get. It's exciting when if you like volatility. He's your guy from that perspective in terms of the financial markets because he definitely gives you some nuggets to chew on.
Yeah.
So
Yeah.
I'm really looking forward to that.
Yeah,
will
and I
be.
should say one
Yeah, go ahead.
final point that I wanted to make here. I was pounding the table earlier about people talking to professionals, not because we don't believe in empowering people with information. That's what we do here at Real Vision, but it's so critical for people. And I want to say this now because there's so much volatility in this space. So many people like me are incredibly passionate about these assets. It's so important for people to talk to financial professionals so they can understand their risk tolerance, so they can understand their risks and objectives as they look forward, and so they can understand what their basic asset allocation is. And once you understand that, then you have the power to empower yourself, to think for yourself, to make decisions for yourself. But please understand that lest people can, be in a position where they don't want to be. And it's so important for people to do this responsibly.
Well said.
Yeah. Jack, Ed, always a pleasure. Looking forward to doing it again next week.
Absolutely, and I'll be watching you, Ash, in a few minutes.
No pressure. Thanks, guys. Thanks for watching.